Yep. Today I'm going to share with you my favorite asset ratios, plus we'll take a look at the gold price. It's got to get over a certain hump. We've talked about it before. We'll look at gold, silver, and platinum as well. And we'll do all the usual stuff we do here with the GMS family. If you're watching this on the replay, use the time codes below to go to your favorite part. But look, let's be honest, really, it is all your favorite part. So if you're watching live, you get to enjoy everything we do here at Good Morning Stackers, your week daily live show all about bullion and economic news. And of course, within the first 1 minute of the show, we do what is called the Synchronised Slurp. That is where you grab a tasty beverage of your choice. Look, I don't care what it is. I prefer you to be healthy, happy individuals. Alcohol is poison. Can you tolerate a little bit of poison every now and then? That's fine, as long as you know what you're doing. But look, grab any tasty beverage and we'll do it in 3, 2, 1. Slurp it together. Here we go. Go. Happy Monday, everyone. Start of the week. My name is Joe Main. I have worked in the precious metals retail industry in Australia for 11 years over 3 major bullion dealers. I then started my own one, and now I do this live. I don't have a bullion dealer anymore, my own one, but I now do this weekdaily morning show, and I help you launch and grow on YouTube and other social media. I give you the skills of how to create consistently engaging content for your businesses, okay? Or even your individual channels, but I mainly work with businesses. I've got lots of clients at the moment in the bullion industry and outside of the bullion industry too. If you want to join me and I'll teach you those skills, hit me up and I'll send you all those details, blah, blah, blah. We'll chat. And now what we do in the first part of the show is we do the shout outs, of course, because this is the GMS family. Good morning, stackers. And I was late. Sorry, everyone. I didn't have my S together this morning, but I did put on a lovely collared shirt just to make up for it. Right here, of course, use the time codes below to go to that the ratio stuff and all that stuff. So Ray M, GMS, everyone. Ray M, morning, Pete, I love it. Hey, Ricky, thanks for... So Ray is saying, hey, Ricky. Ricky is the owner of Perth Bullion Exchange, perthbullion.com.au, my brand partner. A couple of announcements to go on with all of that stuff, and I'll tell you that in just a second, but Ray M says, hey, Ricky, thanks for taking my money on Saturday. Good on you. So I love that people are buying from Perth Bullion Exchange. They're just kicking goals. Absolutely. GMS, hi, Ray, blah, blah, blah. Love, again, you talk amongst yourselves. Is that because Ricky's watching? Is that why he's here? Is that why everyone's calling Ricky up? Let's see. Pete wants to know, when are the kangaroos coming in? Oh, well, you'll find out. CT, g'day, everyone. GMS, y'all. Mark, Florida is back. Mark, Florida man. Again, once again, a Florida man did something either really bad or really awesome over the weekend, I'm sure. Was it you, Mark, Florida? I don't know. Let's see. Hoping for a great week. Yeah, me too. Jason Ashworth. Morning, Joe. Jason. GMS, exclamation point. That's what you do. Come on, man. Lance, GMS, y'all. And, oh, okay, there we go. Perth Bullion Exchange. Okay, fantastic. Oh, I see. So they might. So they posted on there saying, "Will be a couple of minutes. Don't start without me." Oh, right. Okay, so Perth Bullion Exchange might be joining. Oh, okay. Well, there you go. Let's see. Ash's Gold Adventures. Right there. Good seeing. Not seeing Joe. Possible internet problems. We'll keep trying, but I'm right here. Okay. Let's see, Justin on now. There we go, fantastic. And Chris says, good morning, stackers. Well, fantastic. Well, let's see, Perth Bullion Exchange, GMS will be a couple of minutes. Well, maybe Ricky might join us today. That's why now I see why you're asking about Ricky. Oh, fair enough. He might be joining us quite possibly, unless, surely, I reckon he's teasing us. He's teasing, but unless he's on his way to work, because it's in WA over there, so it's 2 hours behind. But anyway, let's see, my lovely, lovely people. Let's do the gold, silver, and platinum analysis to start with. But what we'll do first is I will talk about, seeing as though they might be even watching on the channel today, Perth Bullion Exchange, my brand partner. A couple of announcements as well. perthbullion.com.au. Who the hell are they? Perthbullion.com.au are a bullion dealer based in Western Australia, quite close to the Perth Mint actually. They're in Booragoon, which is a little bit south of Perth. It's about 10, 15 minutes. Perth is a much smaller city than, the rest of the cities in Australia. Not as small as Adelaide. Why does everyone shit on Adelaide? They shouldn't. I've actually been there a number of times. Lovely town. Lovely city. Oh, oops. Freudian slip there. But they launched their business, Perth Bullion Exchange, perthbullion.com.au, on May the 1st. They've only been around just a little bit, and they're already absolutely kicking goals. They've got lots of customers. And, of course, they're Australia's first bullion dealer to offer free shipping when buying any kind of quantity. Any kind of quantity. You buy from any other bullion dealer right now, and I'm talking about major bullion dealers, not people on forums and things like that, buy, swap, and sell. Yeah, you can get free shipping if someone says, buy the lot, buy all of my silver and I'll ship to you free, or whatever it is. But any major bullion dealer that has a website and a shop and all that kind of stuff, they don't do free shipping because of their own, I guess, antiquated natures, I guess, or also it might just not work out for them personally in terms of their back end and their financials, okay? But I think if a lot of bullion dealers give it a second look, they'll go, you know what, maybe I can. But here's the deal. Perth Bullion Exchange went, we're going to be the first. We're the Mavericks. And like I said many years ago, I started, my first bullion dealer that I worked for was Goldstackers. Goldstackers, who are still around. Great bullion dealer. You should buy from them. They're in Melbourne. They were the first bullion dealer to offer spot price for buybacks, right? You can sell your bullion. You could sell your bullion to Goldstackers for spot price back when I worked for them. And that's no longer the case now, but they were the first. And it freaked everyone out back then. You have to understand, you're used to it. If you're just getting into stacking, you're used to bullion dealers like Bullion Now, for example, who I also worked for, as you know. They still buy back at spot price. But back then with Goldstacker, it wasn't a thing, okay? And so they were the Mavericks, and all the other bullion dealers were like, how are they even doing that? It's not possible. It's and I happen to know, some other bullion dealers who still don't believe that even Bullion Now can buy back at spot price. They don't believe it, okay? They don't think it's right. And it's because I just don't think with their numbers, their own back end, they can't do it themselves. Anyway, they were the Mavericks to do it. And then Bullion Now started doing it. Goldstackers don't do it anymore. And then, out of interest, Perth Bullion Exchange are the second dealer in Australia to offer spot for buybacks up to a certain amount. But Perth Bullion Exchange also went, we're going to offer spot. We're also going to give you free shipping when you buy over certain quantities. You buy a tube of maples, a tube of silver coins, free shipping. You buy over a certain amount, free shipping. You buy a bunch of gold, free shipping. You add 20 items of any particular item to your shopping cart. In here, free shipping, express sign-on delivery, blah, blah, blah. That's one of the reasons why they're my brand partner. They're also one of my clients where I'm teaching them the skills to create consistently engaging content. That is the giant plug for Perth Bullion Exchange. A big announcement, I think tomorrow, I will be announcing a brand new brand partnership in conjunction. I'll have two. So it'll be Perth Bullion Exchange. I'm also going to be, I think, pretty much nearly signed on the dotted line, a new brand partner as well. It's something slightly different, but equally as exciting as Perth Bullion Exchange, in my opinion. I'll also probably be doing an interview, maybe with the CEO coming up maybe this week. I've got to figure that out. So that announcement might be coming tomorrow. So going great guns here at GMS, 555 subscribers and just kicking goals. 2 brand partners over just starting the show in May as well, or April, May. Just amazing. So those are the announcements, Perth Bullion Exchange, blah, blah, blah. Let's talk about gold, silver, and platinum price analysis. We'll do that, and then we will talk about, we'll go to there, and then we will do my favorite ratios that I currently look at. Now, a lot of you have seen them. Some of you haven't seen some of them, okay? And this is, of course, to the new subscribers coming on board. Welcome to everyone from Reddit, from Savvy Investors, and the Gold and Silver Stackers Australia forum. Did I tell you I was a little bit frazzled this morning? It was just a big weekend. I had a gig in Geelong over the weekend, and I didn't get a lot of sleep because it finished late. So here is gold on the daily time frame, priced in USD, $2,428 US. We're using the tradingview.com website. I've been talking about it a while now, and so I won't bore all my current subscribers or my long-time subscribers, long time since May, but to the new ones just coming on board, or if you're watching this for the first time, $2,430 is my new final hurdle for new all-time highs. Okay, I recently raised it from 2,400 for a bunch of reasons, which I spoke about before. In particular, the spike up to here, which I didn't like that spike, so I raised it from 2,400 to 2,430. Anytime if we close above, preferably a week or a month, but we remain above 2,430, that signals to me that new all-time highs for gold are coming soon, and I mean in weeks and not in months and years. Okay, so probably within 7 to 8 weeks, probably sooner than that, as long as we remain above there. Again, this is the daily time frame, right? And this is the weekly right here. If we close a week above here, I'm saying, ooh, that's looking really good for the next 7-8 weeks. We'll make a new all-time high, at least above there, while we're above there, right? That makes a lot of sense, right? Because that's a very key area of resistance. Spike right there, failure to close above it at any particular time since here. So we closed above on the weekly time frame, but it was a failed move. So then we made that fast move to the downside. Close above it, remain above it for a little bit, and then we are good to go. We're just not there yet. And out of interest, what do you know? We closed, isn't that crazy? We closed last week at just below this mark right here. Now, technically, that's $2,432 We actually closed last week at, look at the C, $2,430.87, but it's just below this spike right there. So it doesn't mean we're seeing new all-time highs coming soon just yet. It's got to close decently above and convincingly above and stay above for, a little bit of time, right? So that's why it is my final hurdle for new all-time highs. If you're new to seeing this pattern right here, new to seeing my channel, then you've got this rising and broadening pattern right there. You are butting up against, you're trading in that range, okay? So you're coming up to this trend line right here, and then all the way down to there. And while we're between 2,430 to 2,350 $, we're in the no man's land, and that's pretty much all you need to know for gold. Okay, I'm not going to make it more complicated than that. We will take a look at the relative strength index just to see where we are there. That's this down the bottom here. Pop it back to the daily. And again, you can see really, really clearly this trading range. Very, very simple. While we're above and while we're convincingly above, final hurdle, new all-time highs coming soon. Weeks, not months and months and months, right? This is support though. And if we don't hold 2,350 as support, down shears going. The more times, as I've said, you test this line right here, the more likely it is to be taken out. You could certainly see a bounce and then back up and then blue skies, and it's fantastic. But the more times you test it, the more likely. A scenario I wouldn't want to see would be the following. We come back down, we break 2,350, we test here, and everyone goes, we tested and bounced, tested and bounced, sucked in people. It is onwards and upwards. Then finding resistance here at 2350 and then back down here. Ooh, that ain't good. That would suggest a test there and then a quick move back down. That would be taken out. And then this is pure speculation, right? I'm not saying this is happening, okay? I'm just pissing in the wind right here, as an Aussie would say. But that would take you down, definitely. A touch there, a bounce, and then a second touch so quickly, that would probably take it down to my best buy zone. Out of interest, my best buy zone in gold is 2,250, anywhere down to 2,150 $. Should you wait for that? No. Dollar cost average? Yes. Best way to do it? Yes. For me, it's the best risk to reward. Why? Because we've spent a lot of time. We broke out of this key area here, 2,080, spiked to there, resistance there, broke out of it finally, and we've been going on a nice little tear recently since approximately March this year. Okay, broke out of 2,080 all the way up to nearly $2,500, and coming back down to here to test this area because it really hasn't been tested. It wouldn't be surprising. I'm not saying it's happening, but it just wouldn't be surprising and a shock to the system and oh my God, it's all over. No, it would just be a good risk to reward area on a monthly time frame. Out of interest on a monthly, when you, again, each candle right here is 1 month. When you break out of a certain range right there, and then you just come back to test it. It's really not surprising, okay? But I'm not giving you any kind of definite guarantee it's going there. Does that make sense? Good. That is gold. So you just need to watch for 2,430. It's really the final hurdle right there. 2,350. Don't want to see it break. And that's pretty much it on the relative strength index on the daily time frame. We have been trending down, and you can see this trend line right here, and we haven't broken it just yet. So technically, we're still on the downtrend on the relative strength index. You want to see a convincing break of this downtrend line right there, and you'd want to see it break, retest, and then come back up. You break anywhere above about this 60 area on the relative strength index. Let's move it to there. You break about there, 60, and then there you go. You break about there and hold above it, and then we're going, we're going to start heading back into extremely overbought. So that would be really positive looking for gold, okay? But we're not there yet. There's your resistance there. There's your resistance there. Makes sense? Good. That is your gold analysis. Let's take a look at silver. Silver in USD, $27.33 once again. Daily time frame. Relative strength index on the daily, as I said, we've been in extremely overbought or extremely overvalued, okay, extremely overbought, and we've been trending all the way down. We have yet to go into, and it doesn't mean we will, but we've yet to go into extremely oversold down here. And gee, what do you know? We're finding some resistance at right about that horizontal blue line right there. So it's unless we break and hold that blue line right there, we're not out of the woods at all. We're still in a downtrend, okay? You still have the potential area right here of between on my best buy zone, and let me pop that in. We're already in the best buy zone, but you want to see that rectangle right there? Nope, that's not the one. You want to see that one. Where is it? Is that the one? There you go. We are in the best buy zone, right? Between 28 to 26 US dollars. We haven't seen yet, and doesn't mean we will, the bottom end of the best buy zone at least hit. Very, very key area, 26. Down he went down to 25 to 26 is a really key area. You don't want to see that broken below. A test of that, a little spike down, perfect. Chef's kiss, perfect, right? Because that means a beautiful breakout and perfect retest, and then bounce off there and just smooth sailing. That's what we all want to see, okay? But below that $25 level, closing any week or month below there, or closing a day below 25, it's not good. You don't want to see that unless you are looking to load up your truck and, hey, you want to see lower prices, good for you. I'm already at the point where I've got enough. Well, I never have enough, but I'm like, I'd rather it go up now rather than go back down and, loading up the truck more. Okay, I'm cool with my amount of ounces in my hand. Let's see the relative strength index on the monthly time frame. Okay, so this is the monthly right here. So it's still looking really positive. You broke out of this triangle pattern right there. You come out, you break out, you have a retest, bounce off it. Great, that's what you want to see. And out of interest on the relative strength index too, we already went into extremely overbought on the relative strength index on the monthly. We found support here. We consolidated for a bit right here, but 1, 2, 3, 4 tests. 5th test finally broke out, and now we're actually just looking like, it's interesting how it coincides, doesn't it? It's looking like it's coming, it broke out, and looks like it's coming to test that support. That's very crucial, okay? And that happens to pretty much align with, come on, dude, where are you? Right here, pretty much align with this area here, okay? As I've been saying, very crucial. You want to see a spike here. You don't want to see a close below $25, $75, $26 preferably. Just please spike down to there, and then creates a little buying opportunity. People go, oh, wow, it fully broke out and fully back tested. Gobble, gobble, gobble. I will take all of that. Thank you very much. And then it closes above that area. Beautiful is exactly what we would want to see. And then, maybe range for a bit and then onwards and upwards. That would be perfect. But we're in the best buy zone right now, anywhere between 28 to 26. best risk to reward area. Could it absolutely tank? Could it go all the way down to past here, past $19.50, past $20, past 17? Of course it can. Black swan events and all that kind of stuff. It could even happen in natural market cycles. Sure, some people believe we're going much lower than here. I remain skeptical on that because we had this beautiful breakout and this is a natural retest. This is the main crux of it right here, though. We're getting to this area, okay? This is the very crucial one. So if you want to stay updated, watch anyone you like or hit the big red subscribe button to join the GMS family. And what would negate all of this for the new subscribers? Breaking and holding above, I would say as that $29 mark means it's looking very positive. The back-end business line closing a daily amount is above $29.80. So that's really what you want to see. A bounce off here. That's looking positive, back above 29, looking good. Back in business, baby, after 29 and the final hurdle of $31 closing any month above there. Signals, it is absolute 100% go time, no questions asked, barring a black swan or some kind of market manipulation. I will still remain that 37 to 40 US dollars per silver ounce. It won't go any higher than that in 2024. And because of this dip, I'm really sticking to my guns on that. Could I be wrong? Yes. Do I hope I'm wrong and we go to triple-digit silver? Well, actually, no, probably not, because triple-digit silver in 2024, that's not good for the general economy. Silver's going through the absolute roof. Good for you, but not great for everyone else. So, yeah, what else is going on in the world if silver is, having 30% moves in a day, for example? You don't want to see that, really. You want to see a nice, steady creep and climb over the next 5 to 10 years. For example, that is gold and silver. Let's do platinum. Yep, okay, platinum on the weekly time frame, priced in USD again, 923 US dollars. So far, it is still playing out for me. I'll pop it on the daily. It is still playing out. In my opinion, and you can correct me if I'm wrong, I might be completely wrong in terms of the technical pattern. I'm not an expert and you shouldn't follow me as such, but left shoulder, head, right shoulder, we broke the neckline. We actually had a potential breakout right there. I said, watch this downtrend line right here. This goes all the way back to February of 2008. Look at that. The solid yellow line goes back to February of 2008. And I said, watch out for that. That could be an area of resistance. And you'd want to see it break above there and hold above it in order to say this head and shoulders pattern is invalidated, right? But I said, watch there, and what do you know? Then I said, watch this area. If that's broken again, 950, we are heading down to the uptrend line right here, and we hit it absolutely. And I still remain, while we are below this $945 area, this horizontal blue line, see right there, while we're below here, I'm still like 90% sure we're going to see this be broken right here and the best buy zone finally exactly be hit, somewhere between 900 anywhere down to 750 US dollars per platinum ounce. And watch out for a couple of key levels where it could just have a fake out. So at around about 870 or 840, this is probably the best buy zone within the larger best buy zone, I would say. 870 to 840, very key levels of support right there. So are you into platinum? Have you been waiting for platinum to get into the best buy zone? I would be highly considering getting some more platinum when it gets into that area. Again, 90% chance right now while we are below 945 US dollars. If we close above 945 and we start creeping up to here, it's very likely that would be taken out for the next time, particularly if it happens really soon, okay? The quicker you pump to a previous resistance point, the more likely it is to be taken out. If, for example, we ranged for a bit and then it made a play, it's like, yeah, maybe not. But if you go like this and then just a week or two later it makes a second play, it means the buyers are much more in control of the market, much more likely to be taken out. If that's the case and we break above here, that's an invalidated head and shoulders pattern, which would signal to me personally, you can have your own opinion. It signals to me that this is invalidated, so the opposite is going to happen, and we're going to spring out into my getting excited zone, and then we'll talk about more platinum more once we get to there. Okay, but really you want to be crossing 1,020 US dollars per platinum ounce for me to be getting excited for platinum. While we're here, I'm depressed. In here, I'm like ho hum, whatever. It's who knows. Above here, I'm excited. And as you all know, my final hurdle, 1,120, closing on a month. That's bull market, baby, for platinum. But we're not there yet. That's gold, silver, platinum. And I think I will leave it at that because I'm going to talk about some ratios very, very soon. I'll do some quick shout outs and everything like that. Anything else, my funky people? You've got 18 people watching. That is fantastic. Hazza says, GMS, sorry, have appointments today. Enjoy your week, stackers. Well, thank you. Pete Repeat, good on you. Oh, and Vanessa is back too. That is great to see. Now, if you would like to find out more about how I can help you launch and grow on YouTube and other social media, I've done it for multiple businesses now to great success. As you know, if you followed my journey along with launching and growing Bullion Now's YouTube channel, I revitalized Ainslie Bullion's channel. I built my own YouTube channel back in 2017 from 0 subscribers to 10,000 subscribers in about a year's time, talking about economic stuff, crypto and things. I don't have that channel. I have that channel, but I don't upload there anymore. I started this channel specifically for stacking community in May, and now I'm already at, started in May and already at 555 subscribers. And I've got 1, but probably 2 starting tomorrow, brand partners. I must be doing something right, so I can help you do those same things right by teaching you the skills of how to create consistently engaging content. And it is teachable. If you don't think you can learn it, no, you absolutely can. If you don't think you've got the personality to be in front of the camera, you don't have to be in front of the camera. There's other ways you can do creative and engaging content without being in front of the camera. So don't worry about it. If you're camera shy, that's okay. There's other ways you can do it. Or you can also hand me over to one of your employees and I'll teach them the skills of how to do it, and they can be your social media person. Okay? Or look, if push comes to shove and you want my help, maybe I could be your personal social media person too, and I'll upload all your stuff and do all the stuff that I've been doing for a long time. Contact me at gmstackers@gmail.com. gmstackers@gmail.com. I might be able to help you in a bunch of ways. And of course, I'd love you to buy me a coffee. buymeacoffee.com/goodmorningstackers helps to support the show. Of course, what will be happening is we will be doing partnerships coming, memberships coming very soon. Let me get rid of that, Vanessa. Good to see you on the show. We'll be doing memberships very soon. There's going to be tiered memberships where you will pay something like $10 a month, something like that. But it gives you a lot of access to excellent more content, but also discounts from Perth Bullion Exchange and possibly some other stuff too. New brand partner coming on, probably. I've got to sign the thing, but we'll see. But it's looking really positive. So let's talk about my favorite ratios. My favorite asset ratios, which I just continue to watch because they're the ones that I find the most relevant for the stuff that I am invested in. Okay, your asset ratios that you watch might be completely damn different, and that's okay, but here are mine. Obviously, you know, I've been in precious metals since 2010. I've been in crypto since 2013, and also look at some individual stocks as well. So let's just take a look at my favorite ratios to watch. What am I watching at the moment? So let's take a look at those. And if you have your favorite ratios, whether that's stuff that you're investing in or looking to invest in, post a comment below right now and let me know. Or if you're watching this on the replay, post it in the comment section. I'd really love to know. Or if it's ratios that you're watching for the general, more like general health of the economy, like, the CPI index versus this and that and all that kind of stuff, let me know those as well, because we all want to learn from everybody. So that's part of being a part of the GMS family. So, of course, here are some of the obvious ones we look at. And, of course, I've shown it to you before and you've seen it before, and I'll show it to you again. But we've got to start really probably with the gold to silver ratio. Very quickly, it is gold measured against silver. Gold divided by the price of silver, and you get that ratio number. And as this is going up, gold is outperforming silver. As this is going down, silver is outperforming gold. That's probably my favorite ratio that I look at every single day. Why? Because I'm invested in precious metals. I would love to, at some point, take a bunch of my silver and swap it for a whole bunch of gold later on down the track. And then maybe over a decade's time, because I'm probably doing this for my kids, really. I'll teach them the skills of how to look at ratios and go, now, when I swap this silver at gold, and then I'll say to them, in a couple of decades' time, watch the gold to silver ratio, because it might be a really good time to swap your gold for more silver again. Okay, so that's why gold to silver ratio over the long term is really good to look at if you're into the precious metals, of course. And we'll take a look at some other ratios, but right here, it's at. I'll do a quick analysis on it as well. We are still above this big downtrend line right here, which is signaling that gold is continuing to outperform silver. While we are above here, it's still gold's time in the sun. The final hurdle here is around about that 93 area. If we close above there any month, wow, gold is still going to continue to outperform silver a little bit. Okay, it's going to break out and have a decent little rise. Okay, now does that mean you should be buying gold at these points? Well, when you're starting to come up to some highs right there, it's actually probably better to look at silver, because what you would want to do is, as this is creeping up into this area, you're thinking, gold's just going great guns. I should be buying gold now. No, because what happens is, and let me show you on the weekly time frame and the daily time frame, you go through periods of extremely overvalued to extremely undervalued. As this is creeping up, getting into, this is a scenario which I'm not saying is going to happen, but if it did, if gold continued to outshine silver, and it's just everyone's talking about gold and silver's being unloved and all that stuff, it's creeping up and up. I mean, silver might still be going up in terms of its dollar value, but gold's just going higher and higher. You're like, man, I really should have just bought gold. No, because eventually gold will be considered overvalued and extremely overvalued. So maybe buying silver as it's creeping up and up and up is a better idea, because why? What will happen is it will tick over at some point. And then buying silver here and then waiting for that ratio to drop all the way back down into undervalued for gold, you swap your silver for gold down here, okay? Even though this is creeping up, you swap it. Or you can do it in the opposite direction. So that's why, for example, if this was creeping down and down and down and down and down, okay? You swap your silver for gold when it gets to a level that's good for you. For me personally, I like the 50 level. It might never happen, or it might be years and years away, okay? But I think eventually, look at this level. It does eventually get touched. So here, this is going all the way back to 2000s, right? It spent a lot of time up in this sort of 70 to 90 area. That's a long time in that range. It will eventually, I think, tick over. And I think eventually it will come down to that halfway point at 50. So that's kind of what I'm looking at on the gold to silver ratio. But I tell you now, if this continues to creep up and up, gold's outperforming silver, I would be highly considering buying more silver for that play when it eventually ticks back over, which it will, and it will go into extremely undervalued for gold or overvalued for silver, and you swap it down here. Make sense? Good. So that's the gold to silver ratio. Of course, there's other precious metals ratios that we are looking at. We have been talking about, and I'll quickly show for the new subscribers, we have been looking at the platinum to gold ratio and the platinum to silver ratio. I know I've shown you these very recently, but right here, long-term downtrend line, we broke out of it and we're coming back to retest, and we've yet to break it. So this is platinum against gold. As this is going down, platinum is continuing to underperform gold. As this goes up, platinum is outperforming gold. We are at historical lows for platinum against gold. Platinum has never been more undervalued against gold than it is today. Could it just tank? Yes, of course. There's actually room to move on the relative strength index. It is still ticking down. So you could potentially see a break of this trend line. If you see a break of this trend line, you'd have a decent break of it before it came back to retest. And that would be a very crucial retest. So if you broke here, you'd find support somewhere. I don't know where that is because it's uncharted territory, right? But you'd find support somewhere, and then it would come back and retest. And that's when you'd be watching. If you broke, you watch for the retest and see what that does. If that retests and then continues back, not good. If that retests and punches through, that's very positive for platinum. That would suggest, oh, fake out, platinum's back, baby, and you'd be looking to consider, maybe moving some of your gold holdings into platinum, for example, or just buying platinum and watching it go up against gold. So that's the platinum to gold ratio. There's also the platinum to silver ratio, which is actually much more bottoming out. You can find right here, it's holding up really well against silver, actually, and that's probably just because silver is just lagging against gold, if that makes sense. So that's the precious metals ratios, but here are some of the other really important ones for me, okay? We have spoken about it before, but I'll show you here, the gold to stock market index ratio. It is incredibly important to watch this. Why? Because it signals for the big investors out there, the big institutional investors, the big whales, the billionaires, the trillionaires, which do exist, absolutely do exist. You know who they are. Right there, it signals that when the stock market has had its time and then a whole bunch of capital rotation, people rotate their capital majorly from the stock market into precious metals, okay? And that point for me and for other people, which I do follow, but I happen to coincide with their thinking, is right here at the halfway mark. What do you know? At the 0.5 mark right here. So this measures an ounce of gold versus 1 point on the stock market ratio, on the stock market index. Of course, this is the gold in USD to the SPX 500, the S&P 500, the top 500 companies on the US stock exchange. And of course, as many people say, look, if your investment is not outperforming the stock market, then what's the damn point? Just put your money in the stock market index and just leave it there, whether that be the S&P 500 or whether that be the Australian version of that, which is the ASX 200, or whatever your nation's version of your stock market index is. If the thing that you want to be in is not outperforming that, just chuck it in there and just leave it. Yeah, it moves slow, but why would you be in any other asset if it's not outperforming just the stock market? It's easy to do. You just chuck it in there and you're fine. Okay, right? And that's how a lot of big investors think. Well, and particularly very rich people, they don't want to be risky with their money. Okay, they've gone from building and hustling. They probably still hustle because they're very rich. But the very rich people who have made their millions, their deca millions, made their billions of money, they're taking risks with their money, man. They're either parking it in the bank or they've got it in the stock market, probably a bunch of index funds. They've probably got US bonds if it's probably if they got in at a good rate, okay? They just want to park it and have basically little risk. Okay, so why would they get into anything else if it's not outperforming the stock market? And this is the indicator to see if it's outperforming the stock market. And this is gold, right? So gold massively had its peak in 2011. And look, it was the place to be. Gold was the place to be from about 2005 in terms of the stock market index. If you bought gold instead of the stock market index, in 2005, you rode it all the way, and nothing's perfect, right? Duh. But if you bought it in 2005, 2006, and you rode it all the way up to the peak of the gold market, man, you would have been mental to have all of your money in the stock market when you could have put a bunch of it in gold and see gold just completely outperform the stock market for like 6 years, right? Then if you were the most perfect, smartest person in the world, not that it exists, you saw the peak of the gold market and you went, oh, it broke down. If you're watching this, for example, if you had been watching this ratio back in 2011 and you saw, oh, it broke this area right here. It broke this 1.4 area on the ratio. Oh, it's broken that. Oh, I think now we've peaked in the gold to stock market ratio. I'm going to put my money back into the stock market. So you swapped your gold for the stock market. And since then, geez, were you happy you haven't been in gold? Okay, were you happy you haven't been in silver? Okay, and again, this is the thing. We love the precious metals because they are, you don't hold it, you don't own it, real tangible assets, all that kind of stuff. But out of interest, if you're just the non-emotional person, very rich person going gold or the stock market, you go, wow, it broke here. Oh, in particular, we found some support here. Is it going to rally? Oh boy. So in January of 2011, if you're watching this and it breaks here, you're going, no. I'm going to sell my gold and put it all into the stock market again or whatever. And then you've seen the stock market outperform gold like a mofo for a long time, all the way back down to recently of 2021. We had this move back here. Maybe you got a little excited and you put some more into gold. It was a fake out and we're back down here. Okay. Here is the final hurdle, the halfway point on the gold to stock market index right there. Can you see major support right here at the halfway point? Support. Some resistance, failure to break out, failure, fast move, big breakout. It lasted for months and months and months. So that's why you had that big spike, right? Out of interest, right? You had that spike and then the failure, the spike and then the failure. And it closed above that month and people went, oh, that's interesting. Gold was massively outperforming the stock market for that month in, what do you know? Gold outperformed the stock market in February and March of 2020. What was happening there? Sorry, my people. That was the COVID spike. That was the black swan event, which took gold against the stock market right there. Okay. So investors who obviously know that black swan events do occur, some of them probably panicked as well and went, oh shit, I better put some of my portfolio, and they wouldn't have put all of it, they would put some of my portfolio back into gold because of this COVID thing. So that you saw that spike right there, but it was a spike, and what do you know? Where did it spike at? Around about this Fibonacci level, which actually informed what the low was going to be right there. And then, nope, stock market continued to outperform. Then right about here, it seems like, and we don't have crystal balls, right? It seems like that's the bottom. It feels like it. It seems like it at this point. Could we absolutely tank? Yeah, of course. Could gold just tank and stock market goes wild and you're in higher? Yeah, of course. But out of interest, resistance level right there at the halfway mark. Another test right there at the halfway mark. Another test right here at the downtrend line right there. That's the COVID spike in the gold to stock market ratio. That formed that downtrend line right there. You can see very easily that halfway mark is absolutely a final hurdle right there. And we've just broken out. I know I did this the other day, but for my new subscribers, we made a play to break out, failed move. On the monthly time frame, it closed technically within this band right here, within this pattern. This could be the first month, and we've got a couple more weeks to go, 3 weeks to go, where we could close the month above this downtrend line. That would be a big move. If we come in the next few months to test 5 again, and if we close, not spike like here, these little spikes here, spike, no. If we close, so have solid green, even solid red, but solid green above this halfway mark, that's a big signal to a lot of people, in my opinion and many other people's opinion, that a big capital rotation from the stock market into precious metals probably would be taking place, okay? Because many big investors would be watching this going, oh, that's been broken. I think it's time to move a portion of my stock market, a portion of my funds from the stock market to gold, and then could we be on our way? Has that been a big bottoming out for a while, and then gold starts its next bull run against the stock market? Okay, so that's why that's watching this is very bullish for gold. Okay, you want to watch this ratio in particular. You cross that mark, close it on a monthly time frame. Oh man, really watch the gold price. Probably have a good time. I'll just put it that much. Now, is any of this financial advice, and should you be taking advice from random people on the internet? No. Don't do anything that I'm thinking. Don't do anything I would do. Just dollar cost average into gold, blah, blah, blah. But this is a big signal to the big, rich, very, very rich, very, very smart people who go, why the hell would I put my money into anything other than the stock market? Oh, gold's now starting to outperform the stock market. Hello, right? So that's why. So that's the gold to stock market ratio. Let's look at the silver to stock market ratio. We've done that recently as well. It's in a similar pattern. You've got this support level at 0.005, and the final hurdle for me is around 0.007. So we're nowhere near that on the silver to stock market ratio. It feels like, and it seems like, gold would be the first one to break against the stock market, and then silver might eventually do that. Okay, but we're just hovering around the bottom end of this range at the moment. That's all you really need to know. But the smart investors would be watching the silver to gold ratio as well. They might see gold, breaking out against the stock market ratio, but they look at silver and go, oh, gee, that's nowhere near it. But where gold goes, silver tends to follow. So maybe it's starting to break, and then they start getting more into silver, which then makes that move. Does that make sense? Good. But we're historically pretty low against the stock market on both gold and both silver. Okay, so there's a lot of room to move. That is the silver to stock market ratio. And I also wanted to show you some of my other favorite ones. I have been looking at, where are we? I keep this one in the back of my mind, and I did pose this question the other day. Is this the right ratio to look at? Oh, no, actually, I will show you this one first. Okay, because I am in crypto as well, have been since 2013. No, I'm not a gajillionaire, even though I should be after being in crypto since 2013. But alas, that is not the case. Everyone makes their mistakes. This is the Bitcoin to gold ratio. Okay, and I'll also show you the gold to Bitcoin ratio. Why? Because crypto it's a thing. It may just completely tank, and it may be, is the crypto cycle, is the crypto market done? Yeah, quite possibly. There's nothing to indicate that exactly just yet. Bitcoin's going through its usual cycle. Will it continue the similar cycle where it, for example, I'll show you the Bitcoin price, where it has its thing where it does its halving, and then it has a bit of consolidation, and then it rips. Yeah, it could certainly continue to do that. So you would see the Bitcoin to gold ratio break out. But could this be the end of crypto? Absolutely, it could be. Do I think it is? No. From a mathematical perspective, I don't think so. Of course, the halving reduces the difficulty, also increases the difficulty of the mining, reduces by half the output of Bitcoin per successful block that is mined. Example, so the supply is going down. Doesn't seem to be like it's going anywhere really over the longer term, as in going away over the longer term. So could this just be the little hump before the big move? Absolutely. But the Bitcoin to gold ratio is something that you, if you're in precious metals and in crypto, you would be wanting to look out for, of course. So, for example, even if Bitcoin is having its time, it's doing its normal cycle thing, it's going to creep back up again, gold could be actually going through the roof at the same time. You never know. That's why you watch the Bitcoin to gold ratio or the gold to Bitcoin ratio, and I'll show you that right here. So this is it going all the way back to the creation of Bitcoin back in 2000 and... Oh, no, this is from 2011, 2012. Okay. So as you can very steadily see, of course, Bitcoin has been having its run. It's basically been following the Bitcoin price really. So yes, it's been outperforming gold for a very, very long time. Out of interest though, this is the arc, right there. It has failed since March of 2021. It's failed to break out of this arc right there. The guys at North Star Bad Charts, Patrick Karam and the other guy, I've forgotten his name, they call this the Bitcoin Dome, or the Bitcoin Doom Dome right here. You really want to see it break out of there to continue the party of Bitcoin against gold. And so they think potentially, they're not saying it's happening for sure, but they think potentially, you're really going to break out of it other than. So it could be gold's time in the sun against Bitcoin. Again, both could be going up. Bitcoin could be going up, but gold could be going up higher. Okay, so this is why these ratios are very important to watch. And big investors, again, if you were big into crypto, and you'd never thought about gold before, but you know that gold's a good investment in general, you might be watching the Bitcoin to gold ratio. If that starts failing, or in particular, the gold to Bitcoin ratio, let's show this is the inverse, okay? So this is the exact opposite of that previous chart. This is the inverse right here. Look at that, gold against Bitcoin right here. Is that forming? And I don't know the answer, and I'm not saying it is or it isn't, right? But is it? There's a question. Is that forming a bottom right there? Are we at the bottom of the gold to Bitcoin ratio where, again, both could be going up, but gold could be, and I'm absolutely not saying this is the case, we could see gold just fall off the cliff in terms of the Bitcoin ratio if the Bitcoin cycle keeps going like it normally does over the last, few cycles, right? It could just have its whoop right there. So you could see this number just go blip, 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 blip. Could completely happen, but we are still within this sort of inverted dome pattern right here. Okay, so just watching the Bitcoin to gold ratio is interesting. If you see that breakdown, some people might go, well, okay, I'm not going to buy gold yet. I've been into Bitcoin for a while, but it looks like I'm going to stay in there for a while against gold. Or some people who have been majorly into precious metals, who have considered getting into crypto, okay, might see this breakdown and go, you know what, I'm going to sell a little bit of my precious metals and put some of it into crypto, particularly Bitcoin, because it looks like Bitcoin will continue to outperform. I'm not saying either is going to happen, but that's just why you watch this ratio if you're either in both assets right now or you've been considering getting in or getting out of one. Does that make sense? Bitcoin to gold ratio, silver to Bitcoin ratio. Do I have that? That's right. Similar thing. I haven't put in a dome right there, but it looks interesting right there. But again, if Bitcoin does its thing, which it has done over the past previous cycles, then you might see that blow off top, happening eventually. That is that. And the other one I've really been looking at right here is the gold to. Have I done the gold one or have I done the Bitcoin one? No. I've been watching I'm looking at the Australian Housing Price Index. We did do it the other day. Right here, Riot, Silver. Oh, here's a couple of others. I'm looking at, I'll quickly show you here. Here's another one. I'm looking at silver miners to silver spot. That's not the ratio. Sorry, that's the one right there. Silver miners to silver spot. Okay, so let's say you're in silver. You're all in silver, right? And you're thinking, geez, I think I want to buy some of those silver mining stocks as well. They could be doing all right. You really want to check the silver mining stock to physical silver ratio, to the silver spot price ratio. Because if you just go, oh, that silver miner, that one individual silver mining stock, wow, it looks really undervalued. Geez, that could be a good buy. Don't do that until you look at it against your actual physical silver spot holdings. Because then what you might see is right up here, it's trending down. Oh no, so silver's still the better play, okay? So as this is going down, silver miners are underperforming, just holding physical silver. As this is going up, silver mining stocks are outperforming, just holding physical silver spot. Does that make sense? Cool. Out of interest, we're bottoming-ish. I mean, we certainly bottomed on the out of interest. Look here, on the monthly time frame back in September of last year, and it wasn't exact, right? But we went into extremely undervalued for silver mining stocks against spot silver. Okay, right here. That would have been a good time to think, gee, on this ratio, we haven't been in extremely undervalued for silver mining stocks since the start of this particular ratio, all the way back in 2010. And I might just dip my toe into the silver mining stock thing. And this is a measurement of SIL is right there, is your index fund for silver mining stocks. It's a grouping of silver mining stocks. It's not one individual silver mining stock, which you probably don't want to do unless you're really confident you've got some inside information. Hello, SEC, or whatever our version is, ASIC, I guess. But you really want to have just buying into those index funds, right? Getting into individual stocks is risky, okay? However, at the end of this, I am going to show you one individual stock which I'm watching as a ratio against other things. We'll get to that in just a second. And I don't give financial advice, so don't do what I do. But out of interest, you have seen silver mining stocks against silver spot quite undervalued right here. Could it absolutely tank? Yes, but look, it's just been ranging for a while. So on the relative strength index on the monthly time frame, it is ticking up. It hasn't been in overvalued area for quite a while. So some believe, I'm not saying it at all because I have no dog in the fight. I don't own silver mining stocks, but some believe that this is a low point for the silver mining stock index, okay, the index funds against silver spot, meaning some people might be moving some of their precious metals, physical precious metals, into silver mining, or people are deciding to buy silver mining stocks, and then later on down the track, once this really, if it starts to outperform silver spot, if you get to say an inflection point, something like that, for example, up here, they might swap some of their silver mining stocks for the real silver stuff, for the real physical stuff. Does that make sense? So watching that's not a bad idea. You can also do that for the gold mining indexes to gold as well. You can see it's at a relatively low point, but it's certainly got room to move down. Okay, so that's another one. What was the couple more, and then we'll get out of here. Why don't I have my gold to? No, where is? Oh, I do. It's down here. I did this last time. XAU. There we go. This is one I'm looking at out of interest. XAU. So gold in Australian dollars to the Australian house price index. I'm looking at that. So if we do 20 times, give me 1 second. I'll get my little handy thing right here. So 20 times, what, 3,700? 20 times, what, 3,700 roughly? So yeah, it's nowhere near that. Okay, I've never been 100% certain if this is the greatest ratio to watch, if there's a better one, but it is gold in Australian dollars to the housing price index. So that would suggest, and I think this is what it suggests, and you can correct me if I'm wrong. Do I have the wrong ratio here? But it seems to suggest, as this is going down, Australian housing prices against gold, it's better to be in, houses than gold here. But as this is going up, your value in gold, or it takes less and less ounces of gold to buy the average priced Australian home, which, as you know, is very bloody high at the moment. So it looks like for a while gold has been, and it has been because gold's been on a decent tear, it's been outperforming, and real estate in Australia has been dropping recently, as you've been noting. So that's why probably this is going up. Gold's been having a good time recently in Australian dollars, and the housing price has been flat or actually going down. So that's why you're seeing this rise. We're actually at a pretty decently high point in terms of gold against the Australian housing price index. Okay, so we're actually at a pretty high point. We hit an all-time high right here. That's going back all the way to 2006. So it's not, it's 15, 16, 17, 18. I can count. It's 18 years. Okay, so it's not decades and decades, but that's one that I'm watching as well. So, I would love to see, and if I did that with XAG as well. Did I do it with silver? I didn't do it with silver. But with my silver holdings, what I should do, and I'll do it right now. Let's do it right now. XAG. I'm going to show you how to do it. Let's go XAGAUD /AUHPI, Australian House Price Index. Click on that, hit enter. That will give me this ratio right here. I'm going to pop that in pink for my ratios. And this is apparently silver in Australian dollars. Whoa, no, that's not it. That's the S&P 500. That's it right there. That's more like it. This is silver, apparently silver, against the Australian Housing Price Index. So it's actually not, out of interest, in April of 2011 was the peak. Gee, why was that? Because silver was at its peak in Australian dollars at 50 Australian dollars per silver ounce back here. So this was the peak time where if you had thousands and thousands and thousands of ounces of silver, you would have considered divesting out of some of it at least, and maybe getting yourself a lovely average priced home back in 2011, which they were much cheaper back then. Okay, but since 2011, because silver's going down and real estate was going up, you saw that tank right here. So this big move back here in 2020, okay, and then it's been steadily moving up. Okay, so again, that's watching silver against your average, your Australian housing price index is something to watch, in my opinion. If you're looking at, I want to buy real estate with my silver later on down the track, you want to watch that ratio. So that's one right there. And finally, I'm going to give you not financial advice, but out of interest, I have been watching one particular individual stock against the ratio of all of my other stuff. Do not do what I am doing, which is at least looking at it. I'm looking at Tesla against a whole bunch of other things, okay? So let's do, for example, here's Tesla. This is Tesla against Bitcoin, for example. I'm also looking at Tesla against Ethereum, but here's the Tesla to gold ratio right here. As this is going up, Tesla is outperforming gold. As this is going down, gold is outperforming Tesla. So actually, since November of 2021, you would have been better. Isn't this interesting? You would have been better to be in gold than in Tesla stock. Why am I looking at Tesla stock in particular? A whole bunch of reasons, as I've been saying, but if, barring a black swan, barring something awful happening to Elon Musk or some kind of tragedy or some kind of scandal, some kind of cancelling as such or crackdown on him, because we know that the powers that be don't really like him for various obvious reasons at the moment. Barring that, you have got Tesla robots, which will eventually be coming, which apparently, according to him, and his predictions have been pretty right over the years, that's a $20 trillion, $30 trillion industry. Trillion with a T. Trillion with a T. Industry. Okay? And probably he's going to be the first one to do it properly. Okay? There's other people vying for it, so Tesla robots, and also the self-driving car thing. Okay? SpaceX maybe, but mainly Tesla robots and the Tesla self-driving cars. It's probably going to be a big thing. So I'm watching Tesla in particular against gold. I'm watching it in relation to silver as well. And again, it has been, silver has been outperforming Tesla just recently. We're actually at a low point again back in April of just this year, where Tesla had a bit of a dump in price. So I'm watching this as well because I may want to consider divesting out of some of my silver and into Tesla. If I felt this was coming to a low point, okay, then I'd be looking like, so for example, for me, on the Tesla to silver ratio, if Tesla to silver ratio started breaking here, roughly, and is that the one I was looking at? Yes, it is right there. See that? And then we had that little fake out right there. If it starts breaking out of this trend line right here, I would consider moving some of my silver stock, precious metals, into Tesla, or at least buying Tesla rather than buying precious metals, which I've been doing for a long time. Okay, and Tesla against, let's have a look against, you want to look at individual Tesla against the S&P 500. Again, why would you buy individual stock like Tesla if it's not outperforming the stock market? So again, this is the Tesla to stock market ratio. Okay, the SPX right there. So stock market since roughly November of 2021 has been outperforming Tesla as an individual stock. You would want to really consider buying Tesla against the S&P 500 if it breaks here. And here is, just out of interest, the Tesla, just normal Tesla stock right there. This is my long-term, not financial advice. on Tesla. This is my long-term outlook for Tesla, which could be complete, utter bullshit. Okay, I am not saying any of this is happening. I've just been watching a little bit of Elliott wave stuff. And I think if any stock could go really, really well over the longer term, it could be Tesla, for the Tesla robots and the self-driving car factor, and the fact that Elon Musk is a genius, as we all know. Quirky genius, but aren't they all? Right there. So over the longer term, Elliott wave, if this plays out, you could be looking at $10,000 Tesla. And you could even be looking at $100,000 Tesla stock. That's really blue sky thinking. It's just, putting that out there into the world, into the simulation, and, affirmation wise, right? But look, there's nothing to say it couldn't get to $10,000 per Tesla stock, in my humble opinion. That's what I'm watching. That's my final don't do what I do. Don't look at that. Okay. Don't be me. But I am watching that ratio too. So that's ratio investing in terms of what I am personally looking at. They're my favorite asset ratios to look at the moment. And it's 10:41 and I got to go. So any final things? Probably not that many. Fantastic. Full Spectrum Trading is here. GMS. And Sir Alfred. Greetings, friends. Sir Alfred, welcome to the show. I know you've got to get out of here, as do I. Sir Alfred, welcome. You're the first time you're watching this show, so welcome. Hit the big red subscribe button to join our family. Next time you jump onto the live chat, you say GMS in capital letters with an exclamation point. That signifies good morning, stackers. Debt is great, says silver mining. This is back on the silver mining thing. Is a tough gig and is often a byproduct. Ooh, look at this. Hairy chest. Not many pure silver miner plays. Yeah. Personally prefer gold miners. Fair enough. Pete Repeats says, thanks, Joe. Have a great day. Got to run. Yes, same. Got to run. Yeah. Around about the hour point is when everyone starts to leave, and I got to leave too. Are you not worried? So Jason Ashworth says, are you not worried with what Elon says as we should be on Mars? Are you not worried with what Elon says as we should be on Mars and have Hyperloop by now? He seems to come right, but his timescale is way off. Yeah, look, the timescale could be off, but what's the direction in which it is going? So if it's he seems to come right, then that's probably the main thing you would be looking at, rather than trying to time it perfectly. He has been kind of predictive, though. He was predictive with, not with Hyperloop, yeah, not with Mars, no, but with his projections of cars on the road, electric cars on the road, or his amount of production. He said, by X amount of year, we'll be producing X amount of electric cars. He's been pretty bang on the money with that, sort of that in the more micro version of his little world of his company. Yeah, the bigger things like when are we getting to Mars, Hyperloop and stuff, yeah, he'll be out, but I think the general direction is moving right. If he keeps plants in China, they can just rip off robot designs and make them for half price. Well, maybe he won't be continuing to do it in China. And that is it. People are out. All right, I'm out, people. I've got to go. Let's do the final synchronized slurp, the favorite part of your day. Here we go. In 3, 2, 1. Thanks for watching, people. That was a really long show. Didn't mean it to be. Happy Monday, everyone. Let's see what the prices do over this week. Got to watch those hurdles that we've been talking about with gold, silver, platinum. And those are my favorite asset ratios to watch. Don't do anything I would do. That's not financial advice. It's just what I'm looking at. You do you, and that's okay. That is it, people. We're going to get out of here. Thanks for watching.
Good morning, Stack. Oh, yeah, we're feeling fine.
I'll see you tomorrow. Make sure you have your...
Grab a tasty beverage.
And we'll do the...
Let's get in the groove.
Yeah, all right.
Synchronized, slurp.
Stay safe.
Now
Stay
we're on.
informed. Have a great day. Keep stacking. See you tomorrow.